Good afternoon. Happy Thursday. Happy Thursday. And I love the topic of today's live, which is it's it's time for harvest. It's harvest time. And all the information we're getting out is that it is the momentum is picking up on real estate and mortgage. And I know interest rates have gone up slightly this weekend, so we're having a slight deceleration of applications, but the overall trend is that it's time for harvest right now. And that's what I want to talk about today. I want to talk about refinances because there's been all sorts of great data that's come out the last couple of days that really, really calls for urgency in going out and trying to harvest the opportunities that are in front of us. And so I'm going to share some data and then some strategies, and we'll call it good for today. So Scotsman's Guide published an article yesterday titled "It's Refi Time in America." And in the article, and by the way, I put links to this, the article in the notes, the live notes down here, as well as links to one other article I'm going to bring up. And then I've done daily posts in LinkedIn about these articles. And so you can go to my LinkedIn and read my summary and get the link to the article, or you can get links in the notes here. But Scotsman Guide was quoting some statistics, data reported by Optimal Blue. And Optimal Blue reported that in September, rate and term refinance lock volume was up 50% month over month. So lock volume is up 50% month over month for rate and term refis. It's up 700% year over year. So rate and term refis are starting to pick up momentum. This up 7x from last year and 50% from last month. That's great news. And in fact, refi locks are now matching January 2022. So we did more locks in September than we have for rate and term refis than we have in 2.5 years. That's all really, really good news. And that actually just offsets other, and by the way, on refinances, another really set of good news. If you go to the Optimal Blue report, which I'll do a LinkedIn post on it, you'll see other good news about refis is that the conversion rate or the pull-through rate is starting to get back to positive levels. We had dipped to below a 50% conversion rate on rate and term refis back in May of 2024. Well, now that number is above 65%, trending to 70, and that's great because nobody wants to work on transactions that aren't going to close. So another really good thing with refis, if you lock them, you close them, which makes it even more urgent. But I want to share more significant data with you, and I did a LinkedIn post on this today, and it's from the ICE's mortgage monitor from October, from this month, ICE's mortgage monitor. And that, by the way, you should subscribe to that. You should get it every month. It has unbelievable data. This month, their focus was actually on the impact of insurance costs. I did a post on that yesterday. Check it out. Insurance is up significantly. It's up 25% in the last 4 years, more in challenged climates. But regardless, the thing I'm talking about today is the refi opportunity, and the Mortgage Monitor does a great job of outlining the mortgage opportunity, the rate and term opportunity, and check these numbers out, and I hope these get you excited. There's 4.3 million mortgage holders in the United States that could benefit from a rate and term refi today. There's 4.3 million households that could benefit from a rate and term refi right this minute. Rates don't have to get any better today. And here's the qualifications. It's 3 things. 1, the mortgage holder has at least a 720 FICO score. 2, that after a refinance, they will still have at least 20% equity in their home. And 3, the refinance will save them at least $300 per month. Those 3 qualifiers, right? And it suggests there's 4.3 million people that could benefit from a refi today. And by the way, it comes to about $2 trillion in refi opportunity. That's more business than we're going to do this year. It's more business than we did last year. $2 trillion of refi opportunity. And here's another exciting statistic. With a 25% drop in interest rates from where they are today, from a 0.25% drop in interest rates from where they are to today, they drop 0.25%, another 1.25 million people would benefit from a refi. So just think, every quarter point improvement, another million and a half people qualify from a refi. Those are great numbers. So that's what I'm saying. It is harvest time. If you go to that Mortgage Monitor, they have a fantastic chart. I think I use this chart in my LinkedIn post too. It tells you in the money loans by interest rate, And you can see that as interest rates drop down, more people get in the money. It's a very interesting chart. You should check it out. Just there's plenty of opportunity. Now, a couple thoughts, maybe a little strategy, and I'll wrap this up. First, if you're a loan officer and the question is, should I focus on refis? The answer is yes. And you should focus on purchase. You should do both. During the harvest season, we have to work extra long. We have to work extra hard. And the harvesting seasons have been kind of, thin the last couple of years. But now we're coming to a season, purchases are up 7%, refis are up 50%. Now's the time to go and harvest all the opportunity. It means we might have to work, more, longer days, work weekends. If I'm a loan officer, I'm focusing, if I'm a retail loan officer, self-source, I'm focusing on my purchase business every day, and then every night I'm focusing on my refinances. On weekends, I'm focused on my refinances. I'm pounding the phones, at the end of the day, calling as many customers as I can with urgency, because everybody's already after your clients with urgency, working on my refis, moonlighting on refis, working on my files before the sun comes up, then getting back to purchase business. Speaking of purchase business, if you're a loan officer, I would strongly encourage you to meet with your real estate agent partners, and encourage your real estate agent partners to contact their past clients, their sphere of influence, their database. They should call them and say, have you been tracking interest rates? Mr. Homebuyer, first, I was so happy to help you buy a home. How are things going? But the purpose of my call today, though, is to see if you've been tracking interest rates in the bond market. Yes or no? Great. No. Yes. Well, interest rates are improved significantly, and you could benefit from a rate and term refi. You could benefit from improved cash flow, lower cost borrowing, or you could strategically reposition your equity. Do you have a mortgage professional that you can trust to speak to? And if not, I can refer you to mine. The point is, I would coach my real estate agents to call their past clients as a service, right? One, it gives them a reason to call. Two, it lets them demonstrate their long-term commitment to that borrower's household needs for housing, right? And so I would encourage all my real estate agents to call their past clients and to offer my services, to give them an informed opinion on the benefits and see how we can serve them. I'd also do that because then I explain to my real estate agents, hey, look, I'm committed to my past clients, so I'm going to make the same calls as I'm urging you to. I'm not going to do it at the detriment of how I support you or our purchase business. In fact, my hope is, by calling my past clients, my hope is that by you calling your past clients, that we find purchase opportunities that can help each other on this. But we strongly encourage, this is a great call to action to contact with people. So that's on the purchase or refi. The answer is do both. You just kind of have radical activity right now. If you're a self-sourced retail loan officer, you have the wolves are at the gate. They are after your clients. The servicing, the call centers, even the local banks and credit unions, they all want your customer. And so you have to fight them tooth and nail to save them, to save your client. And the first way you fight and save them is by contacting them. Think about it. If you promise to serve your clients for as long as they own a home, and we get into this refi market and you're going, I don't think they benefit from refi, and you don't call them, but 20 other people call them, they're going to go, I guess Ron doesn't care about me. He doesn't respect me. He never called me. Everybody else did. You got to call them. You got to show that you're serving them. You got to have that long-term relationship, that long-term strategy. And you got to get after it with urgency, because I guarantee you your past clients have already been, text, email, snail mail, phone calls. They're getting just absolutely crushed. But you got to get in front of them, and you got to leverage your relationship, and you got to give more, you got to be more, but you got to be out there contacting them. And as I said, the whole call to action here is there's over 4 million people that need to refinance today. And there's another 1.5 million, every time rates slightly improve. And if I were you, I'd call my clients, and you start with the ones at the highest interest rates, of course, the ones you can help right away. And as you work your way down the list and you get to the marginal ones, you still call those. You call those when you get to those, and you call them. And what you do is you agree to a strategy and to a strike price or strike rate that you can execute in the future, that they know that you're taking care of them and their mortgage, so they're not going to be out there shopping. We just have to be really super good at this. Really good at this, and so this is the time to harvest. I hope you enjoyed this data. You can check it out. You can get it either in the links I put below, or you can get it on my LinkedIn. And LinkedIn, I give you a summary on these articles. really positive data coming out. Even though rates are being sticky and they're going to be higher for longer, and I promise you they're not going to go down as fast as everybody thinks. We're still in a pretty good position to have a good end of the year, to refill some of the cupboards that have gone bare, and to set ourselves up for success next year. But it starts with radical action today. That's it. That's my message. Hope you have a great day. I look forward to seeing you guys tomorrow. Thanks for checking me out. I'll talk to you soon. Bye.